Welcome back to the show this morning. It is, of course, 6:33 as we get this holiday shortened week underway. Currently right now we have, total cases in the U.S. of the coronavirus pandemic, 12 million, right? We're doing about 200,000 a day. Good. Now, the good news is we're probably about to start peaking here soon. We saw this same type of cycle last year, beginning in January, February, March. You should start to see things kind of level off, start to decline a bit. But, this does kind of bring up an interesting, kind of dichotomy here, right? Is that we've got no stimulus. Now, remember, this whole past summer, it was every day on the show, we had to talk about whether we were getting stimulus or not, because every day the markets were going up because we were just about to get stimulus. So stimulus right around the corner. Everybody's talking about it up in Washington. Going to get stimulus. How big is it going to be? Billion, billion and a half, 2 billion, 3 trillion. Billion. Sorry, trillion, trillion and a half, 2 trillion, 3 trillion. How the numbers were just astronomically huge. We're going to get the stimulus, right? Markets kept rising. Hopes of more stimulus, and of course, if the government does $2 or $3 trillion worth of stimulus, that means the Fed has to buy them. They've got to monetize those bonds, put some more liquidity into the markets. So markets were elevating. But interestingly enough, now we haven't had any stimulus get passed. And yet the markets are still near all-time highs. And now we're running up because every day it's, a new vaccine Mondays. Every Mondays we announce a new vaccine now, and the markets run up on that news. But here's the interesting thing I think that we should all be thinking about here. So first of all, pretty much wherever you go, right, you've got to wear a mask and you've got to social distance, and so we're doing all these things. And despite doing all that, we're still getting a surge in cases. But, there hasn't been a lot of demand as of late for more stimulus. Take a look at the economy. Now, the economy is stabilizing at a much improved level from where we were in the second quarter, right? So in the second quarter, we had a very sharp drop in GDP, about 50%. And then in the third quarter, we had this very sharp rebound, about 33%. In the economy. So we've recovered a lot of that lost ground. People have gone back to work, as we were talking about earlier on the show today. Traffic is back. Expectations for retail spending are at very high levels. But yet we supposedly have a demand, a need for all this stimulus, right? Oh my gosh, if we don't get stimulus, the whole world's going to fall apart. But yet the data is playing out that that's not necessarily the case. People are adopting and adapting and, getting on with things. And, one of the mistakes we are making potentially is these cities that are going back into lockdowns. And people don't want it, right? There's a lot of these cities where people are protesting. There's a video out this weekend where a health department official and 2 sheriffs show up to, basically shut down a restaurant. They've kind of threw them out. They said, unless you have a warrant, get out. We're working. We got people, we got people to pay. We got to make money, right? And I think there's a lot of that sentiment now coming around that small business owners just want to get back to work. And they'll do whatever, right? They're doing the social distancing. They're doing the reduced seating. They're doing all those type of things. They're taking all the precautions, but they want to get back to work, and that's good for the economy. And getting back to work is important, right? We discussed this about 2 weeks ago on the website. We wrote an article talking about the economic cycle. Stimulus, government support, is not beneficial long term, because all it does is drag forward future consumption. But then if there's no stimulus in the future, right, and people are not working, then there's nothing there, right? So you've got to do more stimulus. You get people to work, they have to produce something. So the economic cycle is fairly simple. I go to work, I do something productive, I get paid for it. When I get paid for it, then I go out and spend the money to buy things I want or need. If a lot of people are working and producing, then they go out and consume stuff. That creates demand within the economy, which requires companies to hire more people to meet that demand. They produce and earn a paycheck, then they go consume something, and then that increases demand even more, so more people have to be hired and put to work, and so forth and so on. And that's the golden economic cycle, right? That's what creates strong rates of economic growth. When you have a large chunk of the population living on government welfare or socialism, there's no production. People consume very short term, right? So you give me some money, I go out and I buy my groceries, but then it's over, and I've got to come back and provide more stimulus to buy more groceries, so forth and so on, right? So you have a reduction in economic activity in socialistically driven societies. This is the case all around the world. It was interesting in this just this recent election, the views of people on socialism, right? There's, the number of people wanting socialistic policies. And of course, that showed up in the vote of who we actually elected for president. People wanting more socialistic policies, right? Forgive my student loan debt. Give me this. Give me this. I want free college. I want free this. I want free that, right? The problem with that is, and what people forget is what America is versus everywhere else in the country, in the world, right? If you make $30,000 in America every year, we think that's terrible. We're like, oh my gosh, you're just barely above poverty level. You need help. We need to give you more money. We need to help you, right? $30,000 is terrible. And we decry out the 1% in our economy, which makes an astronomical amount of money every year, right? It's terrible how much the people in the 1% make versus the people that earn $30,000 in the U.S. every year. But we live in a microcosm in the U.S. We live in a wealth microcosm in the U.S. If you make $30,000 in the U.S., you are in the top 1% of income earners worldwide. And you take that for granted. We consume without regard for the rest of what happens in the rest of the world, right? We buy whatever we want. We do whatever we want. We go wherever we want. We're very spoiled. In the U.S., we had 100 years of economic prosperity that was unparalleled by any other country in history. And we've created a massive amount of wealth in the U.S. And we've talked about this on the show before, is that you take a look at the wealth in the U.S., we're not just wealthier than any other country in the world. We are head and shoulders and mountains of wealth above every other country in the world. And we live beyond our means. Right? I mean, we buy houses we can't afford. We buy cars we can't afford. We spend more than we can afford. So we go further into debt and deficits. And then we decry the fact that, there's a few people that make a whole bunch of money and everybody else is poor. Pay attention to what happens in the rest of the world. And I'm not saying that you shouldn't, be aware of this, right? I mean, but we need to put things into context in terms of how we live and what we do. And then think about this when we go to vote for economic policies, because those policies will have a direct impact upon our future productivity and wealth in the economy. And when you choose policies that erode the underlying economic fabric of the country and erode the very engine of what created the wealth to start with, you're going to wind up with the same result as everybody else. Socialism doesn't work, right? But that's what we want. And so going back to this point is that when we look at where we are in the country today and kind of where we're headed and the things that we're choosing to do, these all have impacts upon what markets are going to do in the future and what things are going to be the outcome in the future of these ideas. So, again, it's just worth spending some time to really think about what we do and what we choose. And if you take a look at what's happening in the economy right now, people are going back to work. People are making that choice to go back to doing things. And yet we haven't had stimulus. and yet the economy is still perking along here. Now, it's not doing great. It's not doing fantastic. We're not back to pre-pandemic levels by any stretch of the imagination. By the way, pre-pandemic levels weren't all that great, right? We were only about 2.2% trend growth pre-pandemic. One of the lowest growth rates in the history of the U.S. economically. But hey, we were getting along, right? We were doing what we needed to do, and we're trying to get back there. But every time we go into this, we think we need, the government says, hey, I'm here to help. Here's more money. Here's more stimulus. Here's more debt. Here's more deficits. The economic outcome of that is not worth the price that you continue to pay. And we've been watching this for the last 40 years. Slower rates of economic growth, more debts, more deficits, slower rates of economic growth, more debts, more deficits, slower rates of economic growth. At some point, you've got to sit there and say, you know what? This isn't working. And if we pay attention to what's happening right now, people are figuring it out. No stimulus. There's been no more support checks coming out. And people are going back to work. People are doing what they got to do. Maybe, just maybe, we need to think about letting the economy find its own way for a change. We might be surprised that we actually get a better result. Be right back after the break.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Long-term care is the financial elephant in the room. The median national cost of a private room in a nursing home? $8,517 a month. Are your finances prepared to handle that burden? Our next Candid Coffee with Richard Rosso and Danny Ratliff can show you how to protect your finances from the effects of a long-term care event, the myths to ignore, and how to prepare a plan to address the cost. Register for the special long-term care edition of Candid Coffee, Saturday, December 5th at riaadvisors.com.
You're listening to The Real Investment Show